I was curious to uncover the 10 stocks that most super investors own and what makes these stocks so great, and why they are the top picks of the smartest investors. Let's find out. Moody's Corporation is ranked 10th on our list and is held by 15 super investors. Known for its credit rating services, Moody's is a critical player in the financial ecosystem. Did you know that Moody's rates over $73 trillion in debt securities annually? And that's more than 3 times the entire US GDP. The credit rating and analytics industry is stable and growing. It's expected to grow at a 17% compound annual growth rate by 2032. And this is fueled by global debt, insurance, and financial complexity. Over the last years, the revenue has increased steadily and it's forecasted to increase even more. And as you can see right here, it's expected to reach around 20% for the last year, for the fiscal year 2024, and around 6.4% in 2025 and 8.77% in 2026. Has performed very well over the 10 years, 433%, over the 5 years, 90%. So if you invested in this company, you couldn't lose money. You just earn money. Even here in 2021, which was a peak, the stock was around $400, but right now it's around $500, so maybe it's not a really huge return. Now let's see some profitability metrics. The most interesting to me is the return on invested capital, which is this one, 18%, 20%. It's higher than the 3 years average, even 5 years average, but pretty much it's in line with the last 10 years. But compared to the 15 years and 20 years average, it seems like the moat has decreased. It isn't really that high as it was in the past. Now the next one is valuation metric, which is price to free cash flow. And right now, as you can see, today it's sitting around 38.7, and this is the highest actually in the entire history of this company. The next one is the free cash flow yield, and as expected, like we've seen previously, right now it's at its lowest in the entire history, right? And right here we can see that something that I like the revenue breakdown, which is half Moody's Analytics and half Moody's Investor Service. Also, the revenue is coming from many countries like United States 52%, EMA 30%. So yeah, I really like that the revenue by country is diversified. But I don't like that much the level of debt of this company. It's true that they have started to pay slowly the debt in the recent years, but I would like to see it a bit lower. But one of the most interesting parts of this company is that it pays a dividend. It's not really that much, it's just 0.7% dividend yield, but what I really like is that the free cash flow payout ratio is sitting around 26.5%, and it's even lower than the payout ratio, which sits around 31%. And this is a very good indicator that the company can increase in the next coming years the dividend sustainably. If you just take a look at the compound annual growth rate of the dividends over the 3 years and 5 years, you can see that it's sitting around 11%. So Moody's Corporation is a very good dividend stock. And also, Moody's Corporation is held by the famous Warren Buffett. So, as you can see right here, it is owned by Warren Buffett Berkshire Hathaway, and it's around 4.4% of Berkshire portfolio. Now let's go with the other stock ranked ninth on our list, and it's held by 16 super investors. As the largest US health insurer, it plays a vital role in the healthcare industry. And did you know that United Health processes over 1.1 billion claims annually, and that's nearly 35 claims every second, which is a really huge number. But let's see some financial metrics. I will start with the free cash flow yield, which today sits around 4.12%. And as you can see, this free cash flow yield is the lowest in this entire history. If we go to the dividends tab, we can see that the dividend yield chart right now it's around 1.55%, which is pretty high compared to the history. Actually, it's higher than the trailing 12 months, 3 years average, 5 years, 10 years, 15 years, and even 20 years. The revenue comes from United States, 97%, which I really don't like that. I would like to be more diversified. Because this is an insurance company, they don't have debt, right? And they earn money through policy claims. The premium earned has increased steadily over time, so that's a really great sign. In the weekly chart, you can see that it has just closed above the 50 moving average, and a few weeks ago it was hovering around the 200 moving average. But anyways, this company is really great, and like since 2010, just only 3 times actually, it has touched the 200 moving average. The next one is Mastercard, and it's 8th on our list. It's held by 16 super investors, exactly the same like United Health Group, and is one of the largest payment processing companies. It connects billions of consumers to merchants worldwide. In fact, they do 2,300 transactions every second, which is a really impressive number. It's a mind-blowing number. Overview of this company, you can see that 67% of the revenue is coming from international payments, right, outside of the US, which I really like it. And the debt has increased, but also the free cash flow. Mastercard, it's a very good dividend payer. So let's take a look at the dividend stats. As you can see, there is 15% growth over the 3 years, and over the 5 years it's a compound annual growth rate of 13%. The free cash flow payout ratio is sitting around 20%, the payout ratio 20%. This is a great dividend payer. And now let's move on to the Berkshire Hathaway's, which is led by the Oracle of Omaha, or Warren Buffett, and this is held by 19 super investors. If we just take a look at the Berkshire Hathaway, okay, over the past years, the EPS has grown steadily, and it's forecasted to continue this trend. Also, the revenue. So this is a conglomerate. It's something similar like an ETF. So if you invest in Berkshire, just think about that. If that you invest in an ETF, something similar to S&P 500, because in fact, if we just take a look at the Warren Buffett portfolio, the Berkshire Hathaway, you can see that 26% is Apple, 15% American Express, 11% Bank of America, Coca-Cola, Chevron, and Moody's. So this translates to 37% financials, 26% technology industry, 16% consumer staples. So it's ranked 6th on our list. It's owned by 20 super investors, and it's a dominant force in consumer electronics, software, and services. First of all, Apple has a 26% of the Berkshire portfolio, right, as we've seen previously. But how does this company perform? So let's search for Apple. And if we just take a look at the stock price over the 10 years, 15 years, 20 years, it has just went up. And over the 3 years, it returned 36%. Over the 5 years, around 200%, which is 2 times. So that's a very good performance. Okay, now let's see the free cash flow yield, because this one is one of the most important, right? So today, as you can see, the free cash flow yield, it's around 3%, and it's in fact the lowest of the entire history. Apple is a very predictable company, so we can do discounted cash flow. And if we just take a look at the fair price, if we just compute by free cash flow, the fair price is sitting around $186. And this means like the stock is overvalued by 27%, around 28%. If we also compute the discounted cash flow model using the earnings, the value is almost the same, $189. And this also means a 26% overvaluation. So we can conclude that maybe Apple right now is overvalued, and this has implications on the US economy, on the global markets, on the major indexes that contain Apple as a primary holding. So if we just take a look at the SPY holdings, which is the ETFs that tracks the S&P 500, Apple is 7.58%, right? Now let's move on. The next one is Meta, formerly Facebook. It ranks fifth on our list, and it's held by 22 superinvestors. It's the leader in social media and virtual reality, so there are actually 3 billion people that use Meta platforms every month, which is crazy. That's nearly 40% of the world's population. The Meta has dropped like crazy because Mark Zuckerberg actually burned a lot of money on virtual reality. Investors thought that there's no hope for Meta to just continue the growth. Meta has started to pay dividends, and right now the dividend yield is 0.3%, the payout ratio 9.14%, free cash flow ratio 9.66%. So it has a lot of room to increase the dividends in the future. But let's see some valuation metrics. And I would go to the free cash flow yield, which is one of my favorites. Today, the free cash flow yield is 3%, and it's below the 3 years average, 5 years, 10 years. Let's see some discounted cash flow model. This model suggests that it's fair valued, because if you just compute by free cash flow, you have a 8% margin of safety. If you just take into account the earnings, it's around 10% overvaluation. So maybe it's fair valued, it's overvalued. The next one on the list is Visa, and Visa, it's a duopoly with MasterCard, right? They also do a lot of transactions annually, around 188 billion transactions, and it's the equivalent to handling 24 transactions per person on Earth each year. Again, it's a crazy number. There's some risks for the leaders, for the monopolies like Visa, and recently they faced some scrutiny challenges, and also the rise of the fintech disruptors and alternative payment systems. What's very nice about Visa, it's the predictability. The EPS growth was very predictable, and as you can see, every time in the last years the EPS was above the estimates about this company. And Visa is an excellent dividend payer, so if you just take a look at the dividend stats over the 3 years, 5 years, compound annual growth rate is above around 15%. The free cash flow payout ratio and the payout ratio are 22%, so again, a very good dividend payer. But if we just take a look at the valuation, yeah, just go to the free cash flow yield, and we see that today is lowest. If you just take a look at the free cash flow discounted cash flow model, it's overvalued by 8%. But if you just take a look at the earnings, is undervalued by 32%. But anyways, so even right here in 2021 at the peak, you would have a 35 return today, and I'm sure that it will be a lot more in the future. So again, this company is a very good one and a very high quality company. In fact, let's take a look at the ROIC, because this company should have a very good ROIC. And as you can see, it's right now at 28%, and it has just increased over the 15 years from year to year, of course with some drops, but the trend is that the ROIC has increased, which means that the moat has increased. And even if the fintech companies are getting some market share, it seems like Visa is very well positioned right now. Next on the list is Amazon, ranked 4th on the list, is held by 25 super investors, is the leader in e-commerce and cloud computing. And did you know that Amazon accounts for over 40% of all US e-commerce sales? And that's more than any other company by a wide margin. So Amazon is not only about e-commerce, they have the AWS business, which is growing really fast. I'm going to the stock analysis and let's search for Amazon. And right here, if you just take a look at the metrics and revenue by segment, you can see that the AWS has increased very fast over the last 5 years, and it's continuing this trend. So in fact, the EPS is supposed to growth at a very high rate at around 20-22% in the coming years. But is Amazon undervalued or overvalued right now? Let's see. This is the free cash flow yield, and over the last year it's the lowest right now, and over the 15 years, actually, let's see this chart. So today is 1.68%, and well, that's an interesting story. Right now, the free cash flow yield is above the averages of the last years. It's actually in line with the 20 years. So let's go right here, Amazon financials, cash flow, and if we just take a look at the free cash flow, where's the free cash flow? On the net cash flow, yeah, you can see that it exploded in 2022. Also, as we've seen, the EPS is supposed to grow like crazy. A big miss in 2022. Maybe in 2030 it will reach around $1 trillion. The next one is Alphabet. It's a company that I own. I think it's a really great company. It ranks second on our list. It's owned by 31 super investors, and it's the leader in search, advertising, and AI. So Alphabet dominates the tech space. Actually, they process over 8.5 billion searches daily, and that's more than 99,000 searches every second. So if we just search for the Google, right now it's at all-time high, and resistance level is around $200 right here, and they are at $195. So if the stock will go above this resistance level, it could reach 250 easily. If not, it will go maybe down to around $160, where I would buy more. So let's take a look at some metrics. The ROIC is really good. It's around 33%, and in fact, over the trailing 12 months ROIC is high. It's like the highest. The discounted cash flow model tells us a mixed story. If you take a look at the free cash flow, it's overvalued by 33%. If you just take a look at the fair value, it's 9% undervalued. So it's not a really reliable uh, mm, model right now for the valuation. The free cash flow yield, it's 2.33%, and it's very low compared to the average of the last years. And let's see also the price to free cash flow. Where is this price to free cash flow ratio? Which today it's around 43, and it's above like all the others. It's above 5 years average, 10 years, 15, 20 years. So it was undervalued few weeks ago, few months ago. Right now it seems like it's fair valued or maybe just a bit overvalued. And the final one, the most owned stock by super investors. Actually, 33 super investors own Microsoft. And this is a leader in cloud computing, software, AI, and it continues to innovate day by day. Azure is the second largest cloud provider after AWS, and it's powering 30% of the global cloud market. Performance over the 5 years, 160%, 10 years, 10 times, right? Wow, it's 1000% over the 10 years. Earnings per share, you can see that it's also a predictable company, and it the EPS was above estimates in the recent years, and it's poised to continue this growth trend. The same with the revenue. So only good news about this company. And just let's take a look at the price to free cash flow ratio, which right now it's 46%. It's above than the others. Well, yeah. So Microsoft is maybe overvalued right now. And let's see the discounted cash flow model. So this is an outlier. Maybe it's not really this number, $250. Something interesting about Microsoft is that if you just take a look at the ROIC, right now it's sitting at 22%, which is a high return on invested capital. But if we just compare to the past, it's not a really great that story, right? So it seems like Microsoft has lost some moat. And I'm not saying it's not a great company. It's one of the highest quality companies in the world, and it's very high. But just be careful that this company has lost a bit of the moat down on the road of over the last few years. These are the top 10 stocks super investors are betting on right now, and these companies are not just shaping their industries, they are defining the future of technology, healthcare, and finance. Which these stocks impressed you the most? And if you enjoyed this video, please subscribe, like, and hit the notification bell. Thank you, and see you in the next one.